All right, welcome. Good morning, good afternoon. Welcome to the Middle East Aerospace and Defense Industry Updates. My name is Michael Cronan, and I'm the president of ETF Insight, an educational-focused ETF content company. And it's my pleasure to welcome Tony Bancroft, the PM for the Gabelli Aerospace and Defense Fund. And today we're just going to talk a little bit about your fund. And delve into what's happening in the Middle East, maybe a little update on Ukraine, but also look at it from a investor's perspective, right? What are the opportunities that are happening, basically in order to fight the war, what do, the forces need for a competitive advantage, and how our companies in the U.S. are rising to help that advantage. And then also because of the remit of the fund, we'll talk a little bit about commercial aviation as well.
Sure.
So welcome.
Yeah. Thanks for having me, Michael. It's great to be here. I think you're talking about, what's all the conflict that's sort of going on right now in the Middle East and Ukraine, and just, the issues that we're sort of as a peer, our peer threat of near peer threat of China and Russia. It just seems like there's a lot of geopolitical instability, and I think that sort of is just sort of secularly going one way. You just don't see a lot of cooler heads prevailing in recent times, and I think that's really been the impetus, of course, for this NATO, this sort of the NATO forming. And you're going to see a lot, probably more spending among NATO member countries. Obviously, the U.S. is by far the 800-pound gorilla in that room, and we've spent a lot more than we projected. Historically, we've spent at a much higher rate than we have. Right. So I think it's probably going to continue that way going forward. That's just maybe just to set the baseline for
it seems like they keep going back to Congress for more checks, right?
Right.
But the nice thing about the industrial complex here in the U.S. is that it can grow or shrink as needed, correct?
Yeah, for sure. And it's really driven on. It is really driven on that instability, that geopolitical instability. It's really not driven on the economy. Right. On who's in office or who's not in office. It's generally bipartisan. Obviously, there's a lot of Air Force bases and military bases in California, as there are in Texas. So it's a very bipartisan issue.
So we're here to talk about GCAD, your ETF, and tell us, what went into thinking about it as a good investment vehicle while covering a space that very well.
Sure. Yeah, I think Gabelli Mary always talks about, we sort of look at the macro and the micro, and we've been long-term. Aero's has followed the industry for 40 plus years, owned companies in aerospace and defense industry. Here, and on a secular and cyclical and structural basis, you're seeing all of the levers being pulled for long-term growth in the industry. So then I guess I come in. I was fortunate enough to join the firm about 15 years ago, and my background is I flew F-18s in the Marine Corps. I did that on aircraft carriers in the Western Pacific, and I also did a ground tour in Iraq. So I've got some experience, I guess, sort of what we're going to be talking about.
I think some on the ground experience in the Middle East, right?
Right. What we're talking about today, and I think sort of those two skill sets of our compounded knowledge of this space, along with sort of my personal background, it was a great impetus. It was sort of the great impetus for starting the fund, and Mario, said, I got this idea. I think it makes a lot of sense. And he said, I want you to run with it. And so he gave me the opportunity back in the beginning of the year, and we've been going ever since. So it's been going great.
Well, that's great. So as you look to sort of capture this economic opportunity, because of the unrest, how have you, how do you look at, first of all, commercial aviation, and, that was something that I think, 10 years ago, Warren Buffett, who, we were just speaking to with Mac earlier, said it was the worst industry ever, right? And then 2008 happened, and they got rid of all of their labor liabilities,
Right.
and it became a new industry, really.
100%.
And so as you look at that industry, what are the what tools, or how do you look at that
Sure.
industry for this fund?
For sure. And, I think just again, to sort of set the framework for on the commercial piece, the big driver here, of course, is the emerging economies, right? So the US and Europe, we've flown for quite a while. It's pretty mature, relatively stable,
I think over 100 years in the US, right?
Right.
Yeah.
And essentially what you said earlier, that once, there's some consolidation and, became higher barriers to entry, more rational pricing,
Right.
the industry became more fortified. But, in emerging economies, some people just have never flown before, right? So
Right.
you have and you'll hear about this, and we've discussed this before, this 300 million people coming into the middle class in Asia and China and South Asia and India over the next decade. And that's a lot of growth. And so that's probably the largest secular tailwind we're seeing. And on top of that, then all the other things that you sort of alluded to with the democratization of travel, low-cost carriers, the low-cost carrier model, Southwest,
Alaska Airlines, right?
Ryanair. I mean, just have allowed for huge, essentially new customers who never would have ever participated. So that's been going on over the last 2+ decades, and we're starting to see that now, where people need there's a lot of demand for aircraft.
Right, and I think with COVID there was some pent-up demand as well,
100%.
right?
And then COVID obviously hit, and that was by far the worst pandemic, or excuse me, the worst travel, the worst hit to travel of since in the history. And people, coming out of that want to travel, and we see that right now. We're way above intra-country travel, way above 2019 numbers, but obviously still some long ways to go.
I saw a stat on CNBC yesterday. It said, 7 of the top 10 travel days happened in 2023, and I think right around the Thanksgiving holiday, 2 or 3 of them.
100%. And just for more to fortify that, is that the other 3 were 2019. So this I mean, travel is really kicking in. And I mean, listen, let's be honest. I mean, who doesn't have someone that knows somebody that didn't go to Italy this last summer? And I mean, it just seems like there's a lot of people trying to get out after COVID, and people want to see the world. And I think that it might be a little more opinion than what I can substantiate, but I think just the next generation likes the experience, right? They want to travel, they want to see the world, they want to put it on TikTok or Instagram, and I think you're just sort of seeing that generationally shift.
Yeah, a friend of mine mentioned that he was going on a trip to Thailand because his wife saw some temple on TikTok.
Right. I mean, really, and so I just think there's a lot of, as we said, there's a secular tailwind going on, along with some structural things that we talked about in commercial travel, and it's just the technology is allowed for ease of getting it, deregulation, technology, and a lot of things, fuel efficiency, have a lot other more people to participate in air travel.
Right. And I think that the ease of navigating the airports and the delays have gotten a lot better as well.
For sure. Yeah, it's more efficient. Yes.
And so, we're going to flip over to the defense industry. We talked about the sort of tailwinds of the Middle East conflict and Ukraine, and I think that the concerns over sort of future conflicts with maybe Iran. What are you seeing from a corporate perspective? Like, it's still kind of focused on Department of Defense awards, right?
For sure, it's by far the lion's share is defense spending. I mean, just to quickly break it down, global defense spending is about two plus trillion. Of that, 1.2 trillion is NATO, and of that is about 800 to 900 billion is the US. So most of it's driven by the US defense industrial base. And, I mean, you've seen obviously just from Ukraine, some statistics with, obviously Javelin production and Stinger production. Essentially, they went through 7 years of Javelin and Stinger production in 1 year since February of 2022. So there's going to be a lot of demand on some of these systems. Obviously, you've heard about all the stuff with the howitzer and other weapons, sort of long range fires, weapon systems that are becoming in high demand. So there's a lot of growth. And then on top of that, again, we said with NATO, you're seeing all of our European allies, NATO members, buying F-35 and putting large orders in, which they had hesitated to essentially before February 22nd of 22. So I think that's just probably going to continue.
And that's just not buy and you're done, right? It's there's a lot large service contracts
100%.
associated with
It's all, I mean, it's 100%. I mean, these things, they don't, you just don't buy them, they just work. I mean,
Right.
It's a huge component. And, and to maybe put some numbers around that, if NATO were to go to the 2% GDP mandate of spending, it'd be about additional $83 billion. That's almost a 7% increase in annual spending in defense.
Right.
So that's a big tailwind that's going to be pushing these companies going forward.
Yeah, no, I think that's really important. And so, what was the experience like going to the New York Stock Exchange, ringing the bell? You're launching your ETF in an area that you're passionate about.
Yeah, it was a sort of a once in a lifetime special experience. My family was there; they got to see the whole thing on the floor, and I had a group of my teammates there, and we really had a great day. And I think it's just a good experience. It's a great idea. The New York Stock Exchange does an excellent job of doing the IPO and bell ring. It was really wonderful.
So let's talk a little bit more. I know you gave us a brief overview, but tell us a little bit more about your background,
Sure.
Especially within the systems engineering and in the military.
Sure. Yeah. I came from a small town upstate New York. Was fortunate enough to receive an appointment to the United States Naval Academy. I was a systems engineer there, which is essentially, the Navy is essentially a big engineering firm. That's
Right.
really what it is, right? I mean, you go on a ship and everything on a ship is driven by it. So, and a lot of it is weapon systems, right? I mean,
Right.
that's what a weapon really is. It's essentially a version of a closed loop system, right? It's just feedback and going to searching and finding or whatever it is. So I sort of cut my teeth there and at the Naval Academy, understood a lot of the engineering, and then was fortunate enough to get out into the fleet and receive a commission in the United States Marine Corps, and went down to do some Marine Corps training in the mud and dirt in Quantico, and then headed down to flight school and did that. That took about 3 years, going through all the flight school program to fly fighters.
Where was that? Is that in North Carolina?
Yeah, and actually you start you do naval flight training, so it's all Navy. It's all Navy based. You start in Pensacola, that's the cradle of aviation. You go through, you do all your ground training, your water survival, the Dilbert dunker, the helo dunker. You do all these dunkers. You do parachute ejection training and all that.
All simulators.
All simulators. Yeah, you do all that, and then you pick what type of platform, either fixed wing, rotary wing, or like large cargo, like transport. Yeah, I was fortunate enough to get fixed wing fighter, and went up to Meridian, Mississippi, is where the Navy's master jet trainer base is, and did that was up there for about 2 years. Went through flight school, flying T2 and the T45, and then was fortunate enough to get the F-18 out of Miramar and headed out to California.
Oh, wow.
And actually showed up to my training squadron, the RAG, VMFA T-101, which is now they shut down the squadron. On 9/11. I was actually there on 9/11, saw them put gray missiles, which are live missiles, actual live hot missiles on those trainers, the F-18 trainer, the 2-seat trainers, which I don't think had ever been done.
Right.
And because they're NORAD's sort of Southwest defense. And, sort of that was my first day in sort of the fleet, so, quote unquote, the fleet Marine Force. And
baptism by
yeah,
fire, right?
It was. And so did that through about a year, and then jumped into a squadron, was fortunate enough to get into VMFA 314, the Black Knights, which was one of the carrier squadrons for the Marine Corps. The Navy needs some Marine Hornet squadrons to fortify their carrier battle groups, and then cruised on the Carl Vinson with CAG 9. Went to essentially all the Western Pacific operating area off of Korea, Japan, Australia, you name it. Spend about.
And you got through all that.
Yeah.
And then you go back to school.
Yeah. Yeah. Right. I know. What am I doing? I'm like, I thought I got my schooling. Yeah. So I did all that, and then came back, went back to my squadron, and then went to Iraq, and then came back into other deployments. So that's sort of my background. But,
great. No, that's it's a great tour through.
Yeah, it was fun.
Your experience. So as we think about like the commercial airline fleets, there's this great statistic here where it looks like we're going to double the number of new deliveries over existing aircrafts. What time period is that?
That's about that's sort of using the Boeing's commercial market outlook.
Okay.
And so it's about a 20-year period. In 2042, we're looking to almost double the fleet to about almost 50,000 aircraft.
Wow.
So it's going to be a big, and it's a big step up. It's those numbers are going to be hard to get to at current projected even rates.
Okay.
So there's a lot of, I guess the point of this slide probably over anything else is that there is a big demand piece out there for commercial aircraft. Absolutely.
And as new aircraft come into service, they're more fuel efficient, they have more passengers.
100%.
There's a lot of benefits.
A lot of benefits.
Yeah.
And the only way you can even get close to net carbon zero is the first thing is just the efficiency of the aircraft. And that's
so is a electric airplane, or hydrogen powered airplane, is that even possible in the next 50 years?
So again, I don't claim to be an expert by any means, but I talk to a lot of people, and I follow a lot of companies that are involved in this. And we actually were involved. We were owner of one of the companies, Textron, which bought a electric aircraft company, Pipistrel, an Eastern European company. And they do this, and they've built one and fly them. And so essentially, I think the rule of thumb you can look at
just like gliders.
No, it's actually like what you would think of a small Cessna,
Okay.
And I think the rule of thumb is that you generally hear is anything the size of like a 10 to 12 passenger, like a Pilatus PC-12, 10, 12, that has the right energy density to weight offsets. And, if you look at it in a sensitivity analysis, that the economics and just the amount of energy needed and dissipation rates and all of that actually work. So I think there will be a lot of trainers, small light aircraft that are going to see electric, and it's going to have a lot of advantages.
Oh, wow. That's great. So what are other near-term sort of catalysts?
Sure. Yeah. In the near term, you're still worrying. The biggest by far is China. China is going to be 20% of the growth for the commercial fleet, and you're gonna need China to be there, and they need to be there. They're already way past their intra-country travel growth that they from pre-pandemic. So they're flying a lot. And their aircraft,
that's that sort of emerging middle class.
Yeah, they're all traveling throughout. We sort of talked about it before. They all want to see the world. They want to see their country. Yeah, just like we did.
See the temples, the monuments.
Right, family when they go back for the golden. All the travel back. So they need to start at least on the Boeing's side, start deliveries of the 737 MAX again. And when that begins, that's going to be an air pocket that's going to be sort of consumed there. The second one is business travel. It's still, it's hard to actually put numbers on it, but by most accounts, I think most people think it still could be up to about 25% off of pre-pandemic levels. But you saw a couple Wall Street Journal articles this past week talking about business travel recovering, and you're starting to see people, to start doing.
And the thing about business travel is that's where the profit is.
And that's a profit, right? Yeah. It's a very slow, mid-teens amount of the volume of passenger volume of passenger miles. it's 70 a high percentage of profit. It can be up in the
For
upwards
the
of 70.
profitability.
Yeah, highly profitable. So that's got to come back, which it is. And you're especially seeing on the international side, you're seeing a lot of, wide body travel really,
Right.
really growing. And then the third piece is that I'm using the 3 Bs here, the, Beijing business and backlog, but the third B being backlog in a sense of the supply chain backlog.
Right.
And, you're still seeing the OEMs talking about sometime in 24, sort of not recovering, maybe even later 24, seeing the supply chain backlogs, still not where they need to be in order to get the production rates where they need to be.
Right. So let's talk a little bit. You mentioned China. Looks like, they also have an outsized opportunity. And I'm assuming this is over the same sort of 20-year period.
100%. Yeah. And this is just, again, to sort of backstop what we talked about with the deliveries. They're a legitimate player. It's right there.
Yeah.
They're going to grow. That's going to grow their fleet, sizably, and they're going to be a big operator, going forward. And we're going to need, and we're going to need to be servicing all of those planes.
Right.
And it sort of just shows the wall of growth that needs to come from this commercial travel.
And in 5 years we'll probably have an India slide, right?
Yeah, it's almost. Yeah, I mean, it's funny. Boeing obviously talks about India very much, but I think it's still, it's still early days. But I think it's just inevitable. I mean, if you just look at where the puck's going, it's just going to be a huge amount of growth there as well, like we talked.
Yeah. And so, you just talk a little bit about air travel and obviously there were some pockets and
right. Yeah, I mean, I think this slide really just shows the resilience that air travel is. I mean, we go through 9/11, and after all that happened, and all the fear and of all that, essentially did nothing to air travel. Right? People just jumped right back on the plane and started flying again, which is. If you could live through that time, it was a different experience, but it shows that statistically that's not the case. And then obviously the great financial crisis, you would have thought, people thought the end of the world, and no one's going to travel again, no one's going to fly. And then COVID-19, and then we're essentially, like you said earlier, 7 of the last of all time travel happened in this year. So we're back, and it's resilient.
So the rising middle class, we touched on it, briefly. I think China is probably 10, 15 years ahead of India.
Right.
But it seems like it's not only just China and India as well. It's like Southeast Asia, South America as a whole.
100%. I mean, in South America, Indonesia. I mean, there's so many countries that population.
I think there's like 600 million people in just Southeast Asia alone, right? And
there's going to be likely a lot of growth. And, and then there's still, sort of further off, and, people talk less about it just because it's further down the road, but, Africa is going to be a huge grower as well. And that's sort of the next leg. So there's a long chain here, but right now you're definitely focused on those 2 countries, and we're going to see a lot of deliveries going in there.
So we've talked a lot about, the increase in air travel and how it affects economic growth, with companies and, passenger growth. We didn't really talk a lot about deregulation. But I think that's, just, it's a catalyst that had happened in the past.
Right. And these have all just continue. Like you're seeing pressure. I mean, just on the FAA alone, just on, speeding up the process of deregulating some of these some archaic. There's just some things that are just just don't make sense, and you're seeing that here in the U.S. and in other countries, just increasing amount of infrastructure. I mean, people talk about 100 new airports, 100 new greenfield airports in China. In the next,
that's
we're just like I don't think there's been how many new commercial airports have been built in the U.S. in the last 0 almost, right? So it's gonna be it's a lot of growth.
That is a lot of growth. And then, as you just think about, overall fleets and services and new deliveries, it's, just big numbers.
These are big order magnitude numbers. There's gonna be some replacement growth of old aircraft, but you're actually seeing old aircraft staying online longer, which is fine because the service agreements for those last longer on some of our engine companies we own. That's a great benefit if you have some legacy plane that has very low, not been delivered, and now you're operating the servicing, which is a higher margin business. So there's a lot of goodness in the slide either way, growth and replacement.
Yeah. And then, just as, the types of delivery, single aisle, that's really
That's the
main growth.
Yeah, I mean, most of us all, but you're seeing a lot of wide body. Wide bodies really got hit hard in the pandemic, obviously, with international travel, and they retired a lot of fleets early, and so you're seeing now the wide bodies growing as well. But by far, yeah, the mass majority will be single aisle, aircraft going forward.
Right. So, I know we want to jump into, individual companies like Airbus and Boeing, and then also cover defense as well.
Sure.
So,
Yep. Yeah. I mean, just talking again, I think this is just fortifying how our view on, there's 10 years of production. These
Right.
are, if you want to get a plane right now, most of the companies talk about it's just 2.5 years before you can even sort of get on the books. I mean, there's just, I mean, it's, they're just and then people talk about, well, you can cancel. First of all, you have these prepayments. You essentially pay 50% of the plane up front.
right.
So, in another little stat maybe, which is a good point here to make in the slide, is that through the pandemic, actually backlogs grew. People said, oh, there'd be all these cancellations, and backlogs didn't move, and on a net basis they grew. So, you would think through a pandemic, everyone's going to cancel their not flying anymore. So I think it just sort of fortifies that.
And then, with this, again, I think we've talked a lot about the individual planes,
Right.
but it does highlight the new rates.
Right. I mean, Airbus still sticks with the 75 rate, and talking about it sometime in 26. That's just a huge number. 75 planes a month is just hard to believe. We're actually going to visit Boeing next month, their Renton plant, to visit the 737 MAX plant and to watch, what they're putting through there. I just can't wait to see it. Been to the F-35 plant, and that's essentially 56 a year. So it's like 2 a month. Can't imagine seeing 30 to 40 a month. So it's going to be quite a show.
Yeah, I think so. And, we're, so as you talk about, Boeing, I mean, their production has just continued to grow. It's something that, we're able to support as a country for the industry, right? So
Yeah.
it's just,
I mean,
but are they profitable? I mean, are they making money on these planes?
Yeah. So Boeing is talking about being free cash flow positive by this year, and then next year looking to have some good numbers.
Oh, wow.
So yeah, they are. And then they have a service. Again, Boeing has a large service agreement with these planes that they've built. And that's sort of, there's a good amount of profitability there.
It's funny to think of airplanes as razors, right?
Yeah, it's true. I mean, they're based on cycles. Every time it goes up, the aluminum expands a little bit. And we have so many of them, right? That's how it works.
So let's jump into defense spending really quick. You want to talk us through what you're seeing on defense spending? Obviously, there's been some recent growth, right?
Yep. I mean, I think this slide here shows that if you actually look at that on a CAGR basis, that's almost that's about a 5% CAGR.
Right.
That backward looking how much the defense budget has grown since 2019, and then forward looking here this is a projecting out. This is essentially following GDP. But I think this is probably going to be a higher number going forward if history has anything to do with it,
right?
And what's going on with it. I mean, this is obviously the geopolitical environment right now is probably more volatile than what it was starting in 2019.
I mean, that's a big curve. That's continual spending, just going up, and if you're thinking about this as potentially being conservative, that's some great growth. Yeah.
So I think the U.S. Is going to be, and it's bipartisan. I mean, you always see people eventually agreeing on defense budgets. That's usually not the problem.
And, when you talk about defense budgets, you're talking about, nearly $1 trillion, right? It's a lot of money.
It's a lot of money. It's a big number. And, obviously most of the U.S., the probably, I'm going to cuff this here, but probably of the 10 largest defense companies in the world, probably 70% of them are U.S., if not more. So, most of the defense spending goes goes intra-US.
And like 3/4 of NATO is actually US spending anyway.
It's US spending anyway. So it's pretty much all, yeah, it's US, and it just shows the growth there.
Right.
And here where you can just see these are the 30 NATO members, now that, we've got, some new joins, we got a new join, and, it
But
just
you
shows.
just look at the big number on the top.
Yeah,
And
I'm like,
it's
that's
the US,
right.
right?
And
So
the right column sort of shows what we're talking about, the 2%,
right.
that 2% number, if they were to all spend at 2%, that'd be the increase right there.
Right. And then, I've heard 3% thrown around or 4%. So, as things continue, that could just go
I
up.
mean, some of these countries spend, close to double digits.
Right.
It's,
And so, walk us through this slide as well, the,
Sure.
NATO versus APAC.
Sure. Yeah. I mean, so I'm using the NATO example, and we've heard this quite a bit in recent times. If everyone were to spend at 2%,
Yep.
it'd be a $80+ billion annual increase in defense spending. And, if you just apply that number to our APAC NATO partners, which are very close allies, of course, not NATO members, maybe for geographic reasons, but very close to the line. If you threw out 2% on those members, that'd be another 43 billion. And I'm just sort of showing as an order of magnitude, showing
Right.
what probably defense spending probably needs to be. It probably needs to be, all things being equal, somewhere around 2% or more. The US, go back to the peace dividend in the fall
Yep.
of the Berlin Wall, and the US sort of had this peace dividend. And the investment in defense sort of was lessened, and the U.S. sort of acted like the world's police, the 911 force.
Right.
And I think those days are over. And I think
Yeah.
and I think that's sort of the point of those two slides.
Yeah, there definitely seems, to be a reset in the way people think about
100%.
their defense.
Yeah.
So that's great. So there's been commercial recovery, there's been defense budgets are stable and growing and potentially growing, faster depending on the amounts of conflict that are happening.
Right.
So those are great tailwinds to this business.
It's sort of it gives a good background to why we did GCAD.
Yes. And so, walk us through this.
Yeah, this is just our performance this year. We obviously started out in January versus sort of the two benchmarks, the iShares Aerospace and Defense ETF, the ITA, and then just the Dow Jones, US defense index, all the defense companies.
Yeah, and I think, as an actively managed fund against passive funds, this is the kind of performance you would expect.
Right.
And I think, it's going to, there's a benefit to being actively managed.
Right. Yeah. We think we have proprietary knowledge, and this is how we get it.
Right. So look at top 10 holdings. I know we've talked about Moog in the past. It's kind of one of those funny names.
Yeah.
But a great company.
It's
right?
a great company, wonderful company. They're essentially an actuation, flight control actuation business. They've been doing it for a very long time. They're
good management team.
Great management team, very well run. They're great part of the aircraft. Obviously, is a critical flight component. Obviously you can't fly without your stabilators and
the rest of these are like household names,
and they're all
right?
pretty
Honeywell,
well,
Boeing.
all good, well diversified aerospace and defense companies with good aftermarkets. Are pretty much all of them.
Right, and I think that's the key here, right? It's that strong service component,
Yes,
higher margin.
Yes.
Well, great. I mean, this has been, a great sort of walkthrough. One of the things that I get questions about a lot are ETF liquidity, right? And, a lot of these are large cap, mid cap companies, mostly large cap companies. Right. And so, when people ask me about ETF liquidity, I say, ETF liquidity has two components. It's primary market and the secondary market. And so, ETF liquidity with this is, not unlimited, but it's vast liquidity, right? You have the primary liquidity of the ETF, and then you have all the secondary stock liquidity.
Right, of course.
So there's really no limit to the amount of trading that you can do. You can come into a $25 million fund and buy, 100,000 shares, and there's no problem with issuing. You call the block desk.
Right.
And then, they call it lead market maker, and you get your penny wide, 2 penny wide spreads.
Right.
So, that tends to be the number one issue that I get asked. What are other questions you get asked about the ETF?
I think, they ask about the active management piece and the turnover. Yeah. And, I'm a big believer in sort of long-term, I like the companies that I buy them because I like the businesses and I
Right.
see the long-term
And you see the value
in them. And so we don't do a lot of turnover, at least in my fund. I don't have a lot of turnover, and I sort of position it in that sense.
Okay. And I think we could go out to the audience and maybe see if there are some questions. I think the other component on ETFs are the tax advantages,
Right.
Within the wrapper.
Yes.
So that's also something people, are always ask about.
Right.
Well, I think we're good here.
Awesome.
We must have covered all the topics. So thank you very much.
Right. That was awesome.
And we'll hopefully touch base again in 3 to 6 months and see how your fund continues to grow.
Wonderful. Thanks for having me.
Thank you.